say a few words about you. So welcome everyone, and thank you, John, for joining us today. John Panagakos is certainly a mortgage expert and has, from what I understand, has gone from doing what we would call, a regular mortgage into being the person that really understands how to help people that are going through separation and divorce. So I will let John say a few more words about himself.
No, thanks, Linda. Thanks everyone for having me. Thanks for attending. For those of you that don't know me, my name is John Panagakos. I'm a mortgage agent in the city of Ontario, or the province of Ontario, I should say. Fully licensed, and I created a niche called separation mortgages about 12 or 13 years ago. And so we almost exclusively cater to people that are separating and divorcing and need mortgage financing. It is rare that I get a regular mortgage these days. I will do them. I have a couple on my desk, but I would say it is like 90-10. So it's like 90% separation and divorce work, and probably about 10% just regular everyday mortgages. So if you or clients or anyone has questions, I'm probably a really good starting point. Here's all my contact information. I do encourage that if you're on Instagram, follow me, because we post about 3 times a week, and we post a video a week, and on our website for clients and others people to enjoy. And it's just strategies and ideas and what to do in certain situations. So if you go to separationmortgages.com, there's like an audio area, and you can just it's like a quick listen. I think the longest one may be 4 minutes, just because they're the longer ones are just case studies. Yes, and then this is our resource library, first of its kind in the country. A little bit more about me. I love charity and I love baseball. So what we do every year, and what we've done for almost 10 years, this will be our 10th year coming up in September, is we partner up with the Jays, who are super awesome and doing pretty good this year, which is nice. And what we do is we get backpacks, from them, and we stuff them with, or my kids do anyway, stuff them with school supplies, and we donate them to kids with incarcerated parents. And we've been doing that for 9 years. It'll be 10 this year, and we're very proud of giving back to the community. So the only constant is change. So for those of you that know anything about mortgages, know that the rules changed almost every day. So what you knew about mortgages 10 years ago is probably irrelevant today, unfortunately. And come end of summer, beginning of fall, there's going to be another set of rule changes, which will probably make everyone pull the rest of their hair out. And it's going to become even harder for Canadians to get mortgage financing. The government and banks are risk adverse, and they love putting roadblocks and other things in front of people in order for them to get mortgage financing. We'll probably see less bank financing and more alternate, or what we call B-lending financing in the future. A little bit about me. I'm an author with Lexis Nexis. I'm an associate member with, I'm collaboratively trained, both level 1 and level 2. Allison Anderson was one of my instructors. But I'm an associate member with Durham, York, and Toronto collaborative groups. And I focus on separation mortgage financing and those people that have tax arrears. So if you have a client that owes money to the CRA, owns a property, there is a process to that. And if they owe money to the CRA and are in the process of a separation and want to keep some sort of property, they need a guy like me. And those are very fun, but they're very, very involved. Pro tip: if your client has a CRA officer, make sure that they are nice to them, because they make or break our lives. Just a little bit of pat on the back for me. I've been a top 5 mortgage broker in Canada for the last 3 or 4 years. Voted one of Canada's top 3 mortgage brokers by Toronto Star. And we've been nominated for top brokerage in the country. We get the results, I think tomorrow. I think tomorrow's our award ceremony. So we're either 1, 2, or 3. Hopefully number 1. But we have a good team of good team of people around us, which is nice. So when should you engage your mortgage broker? I say early, and I say early because we can potentially save them a lot of money and headaches. And so hopefully this presentation you'll enjoy. And there's going to be a lot of what we call fun facts as we move forward. We're trying something different. We did it a month ago, and it was quite. We had quite the response. So other things that people should know is we often will pay for clients' appraisers or appraisals depending on where they're located. It's much easier if it's in Toronto or the GTA. So we say, call us first and we will let you know if we can pay for it or not. And especially if it's a matrimonial appraisal, we will reimburse the client, and we're able to give the matrimonial appraisal to the team or to the mediator in order for them to move forward. These are just kind of the fine print. It's not very difficult. It's actually pretty simple. Fun fact, as of April 1st, 2023, all mortgage brokers must identify themselves with either level 1 or level 2. Level 1 means you have limited options, and level 2 is you have more lending options. So level 1 means you can only really submit to the big banks, and level 2 is you can submit to the big banks and many other lenders. So I'm a level 2 guy. I have to write an exam at some point this year to maintain my level. We're finding more and more people in our industry aren't doing the best for their clients, and we are heavily scrutinized with ECE and other things we need to follow, which is great, by the way. Fun fact: we see trends all the time in our business. So the first 17 deals of 2023. Our first 17 deals, the 17th one was Family Day weekend, so mid-February. This is what we saw. Bar none, it was the same thing for all these people. Client went directly to the bank. Clients were delayed for several weeks, 2 of which were delayed for 4 months. So from November of the previous year, clients had to proceed with title transfer. And so what they wanted to do was, Mrs. Smith wanted to keep the matrimonial home. She went to the bank, and the bank really just put Stonewall in front of her, unfortunately. And ended up happening was they said we have to do this in two phases. So they needed to remove Mr. Smith from title. Then Mrs. Smith needed to refinance. And what we found was, in all 17 cases, Mrs. Smith was not disclosed the rate that she would be moving into, and that they had to pay for 2 sets of legal fees, and needed to pay for the mortgage penalty. Meaning they actually paid more money by doing it this way, and it was very frustrating for them. So we stepped in, and we were able to do this 17 times in one foul swoop. Why everyone needs a mortgage broker? Which banks? Because we know the following. We know which banks will provide a mortgage with or without a signed separation agreement for our clients. We know which banks will provide bridge financing to both clients. We know which banks will deduct child and or spousal support from income in order for them to qualify for a mortgage. We know which banks will use 50% or up to 100% of rental income in order for someone to qualify for a mortgage. The list goes on and on. But the fact is that when clients go to the bank, or when people are directing their clients to the bank, they're really stonewalled, and they don't know what questions to be asking. And quite often the person at the bank isn't very knowledgeable in this area. And the response or the reply is, we need a signed separation agreement before we were able to move forward. But what we're finding is clients want an approval prior to signing the separation agreement, so they can sign the separation agreement with greater confidence. And we're able to do that. In fact, I think 9 out of 10 times we will provide a client an approval without a signed separation agreement with the same bank that originally said no to them. So we're able to do that. We're very happy. That's why we've been quite successful. Part 2 of this. So everyone knows what a debt ratio is. It's income as it relates to debt and how much you can carry. Some banks only allow certain percentages, others allow higher percentages. The answer to all of this is, why can some banks allow for more than others? The answer is, it really just depends on credit income, their asset type, and the risk appetite of the bank. My record is 168%. Something to be proud of, but why? Most importantly, how? And the reason is because sometimes people have a significant net worth, 250, 500 or greater, and they don't necessarily want to show a lot of income. And the reason why they don't want to show a lot of income is because if they show a lot of income, they need to pay a lot in taxes. In essence, the government will be taking a lot more of the client's personal wealth. So there are programs in place, we call them programs, that they can qualify within the big banks, where they can show a little bit of income, but they have a certain asset base behind them. They do not need to cash, they only just need to show it. And then we can provide that to the bank in order for the client to qualify for a mortgage. Meaning they can still keep it, but they now just need to they now just need to be a little bit more strategic on how they're going to pay for their mortgage, but B, on how they qualify. So a lot of our clients fall into this area, especially for the high net worth clients. Fun fact: if you have a property in Ontario, it's depending on what region you're in, but usually the GTA. And then some other smaller municipalities, really just depends on where. But if you have 55% equity within your home, you can qualify for a mortgage without a mortgage payment. It's almost like a reverse mortgage without the negative connotation. So what's the benefit here? We found that the benefit, it allows people to keep their homes, allows for home ownership, better cash flow. It can reduce tax exposure and reduces potential support payments. So we've had clients who had a lot of equity in their homes, and if they were low income just because they had holdings companies and they owned corporations. And what ended up happening was, if they drew more of a salary or drew more of a dividend from their corporations or holding companies, then they would need to pay more in child and spousal support. So we were hired to come in and figure out a solution for a lot of these clients and say, hey, we can get you a mortgage without a mortgage payment, and as a result, you won't need to pay your ex more in child and spousal support, but we can also make sure that your marginal tax rate remains low. So we're brought on to solve various problems, and this is one problem we were brought in to solve actually a few times. So it's good depending on what side of the equation you're or what side of the coin you're on. But it was great for this one particular client who we were helping. What you should know: you can use 100% of child and spousal support payments to qualify for a mortgage. Not every bank allows that. There's probably about 1 or 2 banks, maybe 3, that are divorce friendly, and then there are many banks that are not divorce friendly. So not all banks are built the same. We do not need a signed separation agreement to approve a mortgage. And that is consistent with some of the banks, not all of the banks. Sometimes you can prepay support, which will allow your client to qualify for a mortgage. So the bank looks at a mortgage as a snapshot in time. For example, today I'm paying my ex $5,000 a month, and I have to pay her for, let's say, 4 or 5 years, whatever the case is. Then you multiply it out, and maybe the guy or the person has $120,000 sitting around. Maybe there's $120,000 of equity in the house. So we've been able to structure mortgages where we're able to prepay the support, and the person's able to qualify for the house. Now, granted, these examples are not for everybody. They are for some people. So these solutions are for certain people in certain situations, and they don't work for everybody because not everyone has the ability to prepay child or spousal support. So these are just things that we've done in the past in order to create innovative, creative solutions or customized solutions for our clients. By the way, bridge financing requires all homeowners' signatures. So 2 people are separating, and both people or one person needs bridge financing. Both people who are separating need to sign the bridge paperwork. A lot of people don't know that. or anyone who's co-signing on that property needs to sign the bridge financing approval, as long as they are on title of that property. So very important to know that and understand it. Fun fact: we can approve a mortgage. We can provide a mortgage approval with or without a signed separation agreement. We said that earlier. Some of this will be repetitive, just so everyone is paying attention. What else you should know? Very few mortgage brokers and bankers understand separation mortgages. This is in fact true. One of my first slides was my first 17 files of the year were because someone else couldn't do these types of files. We get calls from BC, Alberta all the time, and from other brokers asking us to either co-broker or to help them make sure that their client can qualify for what we call a separation mortgage. So it's quite often that we help other brokers, but it is even more common that people come to us because they went somewhere and weren't able to be successful. We have access to 70 lenders, including all the big banks. So, all the big banks pass every day, but we have a lot of other mortgage. We have a lot of other what we call lenders that we use on a daily basis in order for people to maintain home ownership. If you owe HST, it's the CRA tax or personal tax, property taxes. The big banks will not allow you to refinance your home to pay off their debts, to pay off the debts. So if you went into, say, Scotiabank and you said, hey, I owe the CRA $50,000 in back tax, whether it's HST, CRA, personal tax, or whatever, they will not help you. You may need to get private financing. You may need to get financing for 24 or 48 hours. We've done a lot of these in the past, and it's really important that there is a process to solution for clients and they understand what they need to do in order to move forward. These types of files can be very easy, but they can also be very difficult to maneuver, depending on what the relationship is between the client and the CRA officer. We tell clients we will help you as long as we have some sort of consent form that allows us to speak to the CRA officer to make sure that we get all the information that we need in order to pay back the CRA. Otherwise, then it becomes broken telephone. Another fun fact: when a client is told to reach out to their bank and be removed from title or the mortgage and needs a better rate, what really happens? So quite often people will say, oh, someone told me to go to the bank for them to help solve my problem. The bank will do this usually in 2 steps, which adds double the amount of real estate lawyer fees, which isn't amazing. Real estate lawyer fees really start at about $1,250. So now you're at $2,500, and then bank in most cases will not provide a client a rate or a solution until the X is removed from title. So these are the scenarios where we talked about the first 17-ish files that we did this year. So there's a lot of blind faith that goes into this. They're like, oh, we're going to get you a mortgage, we're going to get you a really good rate, but we're not going to tell you what it is until the X is removed. So it's really not amazing, and it doesn't provide clients with a lot of confidence in order to move forward. So, and a lot of clients today are being pushed into 5-year fixed rates, which is really detrimental because we're seeing, believe it or not, rates are starting to creep down a little bit. Even though the Bank of Canada hasn't decreased rates, we're seeing that the fixed rates are starting to trickle down a little bit. We focus on the bond market each and every day, and the bond market is tied to the fixed rate, to the fixed mortgage rate market, and we're seeing a lot of downward pressure. And we're advising clients to go for either a 2-year fixed or 3-year fixed. Those clients that move into a 5-year fixed, when rates continue to decrease, will be faced with those really big mortgage penalties. So that's really what we want to avoid in this stage of the market, because we want to really mortgage plan. So avoid the 5-year fix, because we call it the 5-year trap, and it can be really detrimental to many people, especially if they get divorced, because that's when you see a big, massive mortgage penalty. Another fun fact: clients should reach out to a mortgage broker that can provide all the information they need and provide the solution in one step. How clients benefit: they'll only have one set of real estate lawyer fees. Broker can shop around for them and provide the best solution, including rate, payment options, and terms. Terms is the most important to any mortgage. Client receives a transparent solution, and quite often it reduces the mortgage penalty. So that's what we do, usually on a daily basis. A couple more things that you should know. What we do is we shop around. Let's narrow it down from our 70 lenders. Let's really bring this down to about 3 or 4 viable options and carefully assess the rates and, most importantly, the terms together. And that's what we discuss with clients. We're like, look, here's like 3 or 4 banks that are, here are the terms that they're offering, here are the rates. And quite often clients will say, well, what would you do in this situation? And we'll say, look, these terms mean this and these terms mean that. So it's best for you to go over here, and here are the reasons why. We're finding more and more that clients today really want to know the why. They don't want to hear just do this. They want to know the why, and we're very detailed in those conversations and expressing our value to them and saying this is why you should do this and why, and they get it. And they actually feel empowered when you're giving them options versus pointing them in one direction. Fun fact, if you have CRA HST back issues, banks will not assist. We've talked about this. Other potential issues. What happens if the CRA has a lien on your property? What happens if the CRA is threatening a lien on your property? Or if you owe money to the CRA, let's say you owe them $1.2 million. And this is what we did probably back in November-ish. Client owed 1.2, and we were about to pay back the 1.2, and we learned that the client had another $400,000 owing to the CRA. So once the CRA was going to receive the 1.2, they were going to remove the lien and re-lien for $400,000. And so we were able to speak to the CRA officer and figure out everything that was owed to them, and we were able to cut them a check for 1.6, and everyone was happy. So what also happens in this situation is the CRA charges 9% compounded daily on the money that is owed to them. It's almost criminal, but the government can do whatever the government wants. And D is some CRA officers are more reasonable than others. Right now, I'm working with a CRA officer out of BC who is lovely. She's super, super, super nice. It's probably the nicest CRA officer I've ever encountered. Some of them are the complete opposite. So you want to make sure that you are nice with them because they hold a lot of power. These are our common scenarios. So one person wants to keep the matrimonial home and the other person wants to buy another property. Very common. Or both people want to sell the matrimonial home and they either both want to purchase or one person rents. And typically in that scenario is sometimes it's high conflict, sometimes it's amicable, but we strongly suggest, especially nowadays, that a couple who is one person wants to keep the house and another person wants to buy another property, that they use the same mortgage broker or the same banker or whatever have you. The reason is Mrs. Smith, let's assume she's keeping the matrimonial home and she's buying out her ex, and he's going to get, say, $500,000 to go purchase another property. They're often not speaking. And as a result, Mr. Smith's like, hey, X, where's my money? Like, when's it coming? Oh, my broker said, or the bank said it's going to come on Thursday. Thursday comes by, it's not there. So quite often in the home, especially if there's kids around, the environment becomes very negative with a lot of anxiety. But if both people have access to the same person, me as an example, I can just say to Mr. Smith, hey, we have your cash. It's coming on such and such a date. If you have questions, you can contact me. And we find that if there's one central person that both people can talk to, then the environment of the home is way more positive. It reduces the yelling, and the kids are in a better spot. Other things that we run into are tax arrears or people paying too much in support and have lots of equity, or partial buyout. So Mrs. Smith wants to give Mr. Smith, say, $500,000 so he can go buy a property, but then she owes him maybe an additional $100,000 to be paid in 2, 3, 4, 5 years from now. So there's a very special process to that, and only there's, I think, like 2 banks that will do that type of scenario. Or what happens if you're high net worth? We need to see quarterly portfolios, and we're able to show that to the bank. Liras are not to be considered under high net worth. If someone owns a corporation and the corporation has a lot of holdings, that is part of someone's net worth. So there are a lot of solutions that are available to our clients that people like us don't necessarily know about. And here's some information on how people can qualify for mortgage outside of just the regular everyday pay stub, or if someone is self-employed. People that are self-employed quite often have more advantages. We can look at their T1s, we can look at their business bank statements, and quite often the bank will what we say gross up either their dividend income or their self-employed income by anywhere from 15 to about 30%, which is quite appealing. So they have way more advantages than people that are just salaried employees. And then what happens when someone or a couple has several different properties and are separating? That requires one mortgage broker. If you have someone's going to use their bank and another person is going to use a broker, we often just remove ourselves from that scenario and say it's best for both people to use one person, because usually the broker or 2 brokers, or the banker and the broker, or the 2 bankers will not be speaking to each other, and there's a lot of information that is lost in translation, and it ends up blowing up in the end. Any questions so far? I'm not sure. I can't see if there's like a chat screen or anything. So feel free to ask a question. No, maybe.
I don't see anybody in the chat yet.
Okay. If anyone has questions, feel free to ask. My favorite color is blue, and my birthday is February 13th. So if you're wondering what you should get me for my birthday, something blue, please. Here's a fun fact. If a client has 1 or more properties, they need, we talked about this, 1 or more, really just 1 mortgage broker to assist. So here's what happens. When the clients have a cottage and or rental properties, we always ask, is there a tax issue? Or if you're disposing of a rental property, is there a capital gains issue, or is there a capital gains tax a possibility? So a lot of people, what they don't realize is quite often people have RRSP contribution room. And so we had a scenario where someone was going to pay $88,000 in capital gains tax. And we worked with the client and his accountant to make an RSP contribution. And so we were able to help him save a lot of money. He was going to spend the $88,000 regardless. So instead of paying it directly to the government, he made an RSP contribution, and as a result received a credit. So we work with clients, and we try and help them understand that there are ways for people to keep more of their money and pay the CRA even less. And so if you have a good accountant, a good mortgage broker, they're able to work in tandem. And if the client's on board, it's really the sky is the limit. And the big thing here is with tax issues and liens, we foresee the trend moving forward, especially with like a lot of job loss. We anticipate greater job loss and quite possibly a recession coming late 2023. That's typically what happens in this type of cycle, where we see a lot of, or a rapid rate increase. We typically, in the last God knows how many years, I think since like about 1950, we should be walking into a recession. As a result, we will see more and more people owing taxes to the CRA and are not up to date with their taxes. As a result, we will see the CRA actually adding more liens onto properties this year and next year than ever before. So if you're doing something or helping a client, please make sure that you're always asking those questions, and getting the CRA officer's direct number is important if you ever want to solve that problem, and getting them to sign some sort of consent form or giving you authorization to speak with that CRA officer. Here's high net worth individuals. So every bank has a different policy. Some banks need minimum $500,000 in liquid assets, and some need about 250. As long as you have, as long as your assets are eligible, and assets here are GICs, cash, TFSAs, bonds, seg funds, mutual funds, etc., they will use 70% of your RSP. And what they'll do is you're able to qualify dollar for dollar. So if you have a $500,000, say GIC sitting in the bank will give you a mortgage for $500,000. They won't they won't hold it. They won't add some sort of lien on the or guarantee onto the GIC or anything like that. They just want to see the certificate, and whatever your income is, that you'll be able to qualify for an even greater mortgage. This is what we do for a lot of people, especially the people that are quite savvy and want to pay less in taxes to the CRA. So these are just a couple of things that we look at, and then some banks will even look at the cash component within the life insurance policy, and use some of those funds in order to qualify for. We've seen life insurance policies where the cash component is, several millions and millions of dollars, and it's been quite wonderful for us to be able to help clients in different ways. Fun fact: if the matrimonial home is sold and both listed owners on the property, so both listed, we talked about this, both listed owners need to sign the bridge financing. And if they both need bridge financing, they need to go to 2 different banks. I don't know, there's rumors that there's one bank that is currently doing this, but I'm not convinced yet. But we often suggest to clients, go to 2 different banks if you both need bridge financing, or if you can't go to 2 different banks, then one person needs to buy and sell on the same day. And if that's not the case, then we can provide private bridge financing for one of the 2 people. And we often encourage that people, although people are separating, that they are open to the idea and understand that they both need to sign each other's bridge financing. And that's really important. Self-employed individuals. This is really what's required for self-employed individuals. The banks, what they'll do is they'll look at a 2-year history of their income. With dividend income, some banks will gross up that dividend income by about 25%, depending on what we call the loan to value. So if you are refinancing a property, or if you are buying a new property and you have more than 80% of a down payment, the bank will naturally gross up that dividend closer to that 25% mark. So there's less risk to the bank, and as a result of less risk to the bank, there's more of an opportunity to gross up dividend income. Other things is, AIO is articles of incorporation, but we can use, because people in their holdings companies or in their corporations hold a lot of wealth and a lot of investments, we can use those, the articles of incorporation, to match their portfolio in order for them to qualify for a mortgage. So it really becomes really strategic. So we ask a lot of questions and for a lot of information in order to figure out where the client fits. If you are just business for self, you can gross up your net income by 15% each year in order to qualify for them. So let's say your net income is $100,000. The bank will look at it as $115,000, which is really nice. And we often ask, hey, my cousin Jimmy, great guy, owns a Greek restaurant. Surprise, surprise. There is a huge cash component to his business, and as a result, we're able to work with the bank and say, look, Jimmy owns this restaurant, and there's a huge cash component. On his taxes, it states $100,000. We're going to gross it up by 15% for a net income of 115,000. But logically, there's a cash component to this business. So we're able to work with the banks for them to understand and be reasonable that maybe the Jimmies of the world aren't reporting everything. Maybe. And so the bank can be a little bit more open to the idea of thinking outside the box. I think there's a question in the chat. Linda.
There is, if income still shows too low, how likely is it that that person can qualify just on the basis of equity on the home, for instance, fully owned home, but low income, or the income shows low?
It depends on it depends on how much equity there is, depends on where the property is, and it actually just depends on how much you need, right? So if the person is self-employed and shows a low gross income, well, can we look at the business bank statements and use the gross amount less 20%? Because typically what banks will look at is they'll look at business bank statements and they'll look at all the deposits, and naturally businesses have expenses, right? Computers, internet, cars sometimes, whatever. So they'll take about 20% off the top, depending on the industry, and then they'll use about 80% of the gross deposits, which is higher in most cases than of the net that's on the T1 general. So there's two different numbers that we can look at and use, and I hope that answers your question, whoever asked that. So there are different. We look at things, every solution through a different lens, if that's helpful.
And what about if it's retired persons?
OAS, CPP, that sort of income. Are they getting any sort of dividends from maybe they own Bell stock or Enbridge stock, which is pretty favorable, and a 7% dividend that they give out every quarter. So we look at that sort of income, or maybe that income isn't there. So you might have to resort back to those CHIP reverse mortgages, good and bad. So if you're getting a CHIP reverse mortgage, there's two companies. There's CHIP, and then there's another company just like CHIP, but it's not CHIP. And we find that as long as you can qualify, and it's not hard to qualify, as long as you can qualify, their terms are way better than the CHIP people. Nothing wrong with the CHIP people, just their terms are a little bit different than the non-CHIP reverse mortgage people. So we try and approach those people first because the terms are way nicer. And so, and if the goal is for the person to keep the property, maybe pay the next, that's probably your solution. Moving along, how do banks consider support income? So some banks want a history of support income, 3 to 6 months. Other banks, they'll only use 30 to 50% of support income to qualify for a mortgage. Other banks, they limit you to a 25-year amortization if you're using support income, which results in a higher mortgage payment than that of a 30-year amortization. So the lower your amortization, the higher your mortgage payment. Typically, most people want a 30-year amortization to have a low mortgage payment. So, does the candidate need to have a job? So quite often we have, a stay-at-home parent, traditionally a stay-at-home mom. She's receiving $5,000, $10,000, $15,000 a month in support income. Not every bank loves that scenario, but some banks do. And so we deal a lot with, or if people are in the process of separation and divorce, how do we get them a mortgage? Because they don't have a signed separation agreement, and in most cases, they don't have a history of support payments. What do you do in that case? Well, there's two banks that I know of where we send all those files to for our clients, and they understand that there's a certain segment of the market where people are in the process, right? And a lot of banks don't understand that. A lot of banks and underwriters, God bless them for the most part, they're just like, oh, I need a signed separation agreement. This is the way it's always been. You know what? I don't even know what collaborative is. I don't even know what mediation is. All I do is watch TV, and these people are going to rip their heads off, and they're just going to be in court forever and ever and ever. And this is the way we do things. So that's great for those banks and those people that think that way. We just go to a different bank. We just go to the divorce-friendly banks. And the divorce-friendly banks, they're no different than the other non-divorce friendly banks, they just have different policies. The rates are the same. So they can use 100% of support income. They don't need a history of payments. They just need a document that says, hey, guess what? He's going to start paying June 1st. Great. They'll use it dollar for dollar. It's wonderful. And, you know, we can approve files with interim separation agreements. So there's we just need to look at what the specific scenario is and then create a customized solution. That's what we do for everybody. When to engage us? Early. Saved some time. I get calls all the time when people are in a settlement conference and they're just like, oh, we're about to figure out if Mrs. Smith can keep the house or Mr. Smith can keep the house. We need a solution right now. My phone rings off the hook Friday at 2:00 for whatever reason. Settlement conferences are Fridays at 2:00, and that's great. And I flip up my computer, and I can get them not a pre-approval if they haven't done the application, but I can give them a pre-qualification and say yes, we're in the ballpark. Yes, we can approve this, and you know we have a pretty good track record on being able to provide feedback on the spot. We provide solutions for both clients, so there isn't a there isn't a bias or there isn't something to be worried about. We disclose everything to or what we can to both people, and we will disclose everything to the bank and say, hey, we're helping both. Here are both clients, or if one person's going to one bank and we send another person to another bank, and we just fully inform them of what's going on. And then professional and call us to discuss a strategy. It's more strategic. It's better to be strategic than it is just to provide somebody a rate. And another fun fact is, if one person is keeping the matrimonial home and buying out his or her spouse, it is best that both individuals use the same mortgage broker. We've discussed this. Why? Increased communication between both people, reduces anxiety in the home, and allows for a clear path for the person buying the home, because the person buying the home wants to know when their money's coming, because they don't want to be sued for missing the deadline to purchase the property, right? They don't want to lose their deposit and all that stuff. So, and it reduces a lot of risk. And yeah, it's been quite good over the last 12 or 13 years. And this is me, and that's been my presentation. And I hope you learned something. If not, then I hope I was able to provide you with some really great eye candy for the last, say, hour and a bit. But if you have questions, I welcome them, and I'm happy to create a conversation and discussion around any questions you may have. Allison Anderson should have about 7 questions.
I don't have any questions, John. Sorry.
Thanks, Allison.
This is Blair. What provinces can you practice in? Are you just Ontario, or?
I'm just Ontario, but we have a network. We have a national network. So I've done files in BC, Alberta, and Quebec. Quebec is very difficult. Just a heads up to everybody. And what we'll do is we'll do the client intake, and then our back office will do all the paperwork and all the compliance, just to make sure everything is above board. So if there's a BC or an Alberta thing, we will bring in our national office to do the back end stuff. Anything in Quebec, very difficult. We have Quebec partners that we will provide a direct referral to in order for the clients to communicate.
I live and work in the most densely populated province of Canada, but I don't think you'd probably do anything here then.
Which province is that?
Oh, come on, take a guess.
Oh, you got to be in Nunavut now.
Prince Edward Island.
Oh, PEI. Oh, I know a bunch of good brokers out there. There's a lot of good ones. Well, we find in Eastern Canada the transactions there are small, yes, but there's a lot of them for those brokers. So they are what we call well-oiled machines out there. They are very good at what they do, and they're very process driven.
But so if I had someone interested connect through you?
Yeah, you
Or-
can do that.
yeah.
You can do that, or
Okay.
send me an email, and I could probably give you a list of decent mortgage brokers out there that could also
Sure.
help you. But if you wanted to deal directly with me, happy to, and I'm happy to chat. Right, so my phone number is
Yeah.
on the screen, and anytime. I'm not free this afternoon, but tomorrow after 1 o'clock my time, happy to chat.
My other question is, you had another screen when you started off with your resource page on screen, but you slipped past it. What's
Go to
your web?
So go to separationmortgages.com,
Okay.
right? Top right should be like audio clips or like a audio pods or pod audio, something like that. And there's got to be over 10 at this point. We're adding to them each and every week of just different ideas, solutions, thoughts. Clients love it. We point them to this and we say some is going to be relevant and some is not going to be relevant, but it creates a larger conversation, and it helps them with peace of mind, and it helps them understand that they're in a similar position, if not the exact same situation that we're speaking about in the audio cast, and it gives them light at the end of the tunnel. So it's quite informative. We've received a lot of positive feedback. Any other?
So John, yes, you mentioned that it's good to get you involved early. So when you say that, if anybody is talking about like either looking for a property or they are looking at somebody who's going to buy out the other person, so as soon as that situation exists, is that what you're saying, that then it's a good idea to reach out and see if there's something that you can do to work with them?
Yeah, that's helpful. Because usually it's okay. If there's a matrimonial home, does someone want to keep this? Yes, no. If both want to sell and rent, they obviously don't need a mortgage broker or a banker. But if someone wants to keep the property, it's probably best that they speak to a mortgage broker like myself, as an example, that can give them feedback right away. Right? We know with people that are separating, divorcing, one person is probably 6 months ahead of the other person. The person that delivered the news wants to get things done, and the person that has received the news, is really just taking their time because they need to catch up. And so we find more and more people just want information that they can do this all on their own, or they're doing this with a new partner, as an example. So the more positive their mindset is, the better I think the outcome of the separation.
That's great. Thank you. And I have one other question. So do the banks give a reason why they aren't willing to do any financing if monies are owed to CRA? Like, does it really make any difference if the person's racked up all their credit cards or whether they owe CRA?
Yeah, so it becomes a slippery slope. So the banks always get paid first. That's sort of the understanding in Canada, right? The only entity that supersedes the bank is the CRA. The CRA has something called super priority. So if somebody owes money to the CRA, it is understood that they're going to owe money to the CRA again at some point. And so the banks hate using their own money. So like Blue Bank, whatever.
Mm-hmm.
They're like, well, no, we're not going to refinance your home, take out equity and pay this and pay the CRA. There's other, I think, legal ramifications that come with that if the bank didn't pay them, didn't pay all of it to them. Like they can go back and like add a lien and then become what call the CRA will always be in super priority, especially if there's HSC is a big one, and as is what's the other one when you have employees, there's another employee tax, I believe, that they're very stringent on. But banks usually do not do that. There are exceptions to the rule. I'm not going to lie, there are exceptions to the rule, but the exception has to be within a certain window of opportunity. So if you owe money to CRA because you did your 2022 taxes and you owe them 20 grand, we could probably get that done at a bank. If you've owed CRA taxes for the last 10 years, You still have great income, but you owe them $300,000 or $400,000. Unlikely, right? So
Right.
if it's this tax year, you get the right mortgage broker that knows the right people at that bank, they're probably going to do it. But if it's an ongoing issue, unlikely, and you might have to get just interim financing for a couple of days. If there's a lien, you need interim financing for no less than 2 weeks.
Right.
If
Okay.
you just owe the CRA some money and you want to pay them back, and then you want to get bank financing, you could probably get financing for about 24 or 48 hours. And then you could get bank financing essentially the next day. We've done a lot of those transactions too.
Okay. We have a question in the chat. Are your fees paid by commission on the mortgage by the provider or invoice to the client?
No, usually, so 9 out of 10 times the bank pays us. So as a mortgage broker, we try and get things or solutions financed at the bank. I think in 2022, we did, I don't know, 200 some odd files, give or take. We probably charged 7 people, maybe 8 people. So not a lot. It is rare that we charge. We try not to, but we fully disclose up front if this is going to be a file that we are charging or not. And that's usually based on credit and what their income scenario is like. So sometimes the credit is really bad and sometimes the income is really low, but they can still afford the property. And so it becomes fee based because the bank then won't pay us. And we fully disclose that upfront. We also have a lot of doctor clients, as an example, who have great credit, but they get paid into corporations and dividend themselves very little. And most of them end up paying us a fee because they just want to pay less in tax. So it is rare. It is absolutely rare that that happens. And anytime someone is being charged a fee, I believe there's 3 forms that they need to sign well in advance of them receiving funds. So we're heavily compliant and fully transparent.
Okay, great. There is one question, but it's just, will the presentation be available? If you provide it to me, John, I'll pass it along. Is that all right?
Yeah, I can do it.
Okay, great. So yeah, I'll send it out to everybody that registered.
Yeah. And if you have questions with it, honestly, I'm easy to get a hold of. And I'm happy to answer questions and create like some sort of dialogue. And I think this is a topic that is, I think a lot of people like it, and it's only getting more and more difficult to get mortgage financing. We're even going to see that, like I said, late summer, early fall, we should see mortgage rules tightening a little bit. I'm going to predict something, but when you predict something, you stick your neck out and sometimes you get in trouble, but I'm going to do it anyway. I'm crossing my fingers and hoping by about 2025, we see 40, maybe larger amortizations in 40 years. That is something that might happen. I'm really crossing my fingers, which will be helpful for people that for cash flow. And then we will continue to see Canadian housing continue to increase. And for those of you that don't know, the bottom in the housing market was probably about 6 weeks ago, and now we're seeing an upward trajectory. We've had some clients just actually this morning purchase property. They walked into a property. They said the properties that they walked into, I want to say 7 properties. Every property that they walked into wasn't staged, and they said the beds weren't even made. They just knew that they were going to get these crazy bids, and each house had 5 offers on it. And so I think we're seeing that again, which is good and dangerous all at the same time. But we never pressure people into making an offer on a property whatsoever. Cash flow is king.
John, for your prediction in 40-year mortgages, is that the point at which we're also going to see our principal residence tax deduct or non-taxable go away?
I don't know. I guess it depends on how you vote, but I'm not sure. Like in Japan, I think it was 1994, they brought in 100-year amortizations, if you can imagine. And what they do is in Japan, they call them like generational mortgages. It's not like an official term. And so, family has a couple properties or whatever, and then They just give it to their kid. Here's a property worth X amount of dollars, and here you go. I think a 40-year amortization would be a good blessing, but if that happens, then we'll naturally see probably house prices overnight go through the roof again. We're seeing, is it 500,000 people every year come into Canada, and by 2025 there should be 1 million new immigrants, and that doesn't include like the people that are doing like the refugee status claims. So I think it's going to be a lot more than the million that they want, and the government, for whatever reason, doesn't keep up with supply. We're very slow to build in Canada. And so it becomes very challenging. So hopefully that answers your question, Gail. She's nodding her head yes. Yeah.
Any other questions before we let John leave?
Yeah, if anyone has any questions, honestly, just send me a note, call me. Happy to chat, happy to brainstorm. And I hope everyone enjoyed the presentation, and I hope you had a couple of takeaways. And if you didn't, then I've failed miserably, but something tells me that you've learned a couple of things.
Oh,
I did learn a few things, and you were not great eye candy, just so you know.
Oh, thanks, Blair. Thanks. Well,
there.
I will also say, I hope the Florida Panthers win tomorrow. That's all I'm saying.
Well, that's pretty
What?
controversial.
What, John?
I said, Allison, I hope the Florida Panthers win tomorrow.
What?
Yeah. For those of you that don't know, Allison Anderson has a hearing problem.
I can't believe that you said that online on here. I
No.
was just going to sing your praises, John, but
Yeah. Well, next time. Next time.
I don't know.
Feel free to sing them. Feel free to sing them.
Anyways, thank you very much, John. I do think that there was lots of information in here, and I'm sure everyone has learned something, and at least now they also have a resource to go to for any situations that they come up with themselves. So appreciate your time, and we're happy to always learn. Thank you.
Yeah. Thanks for the opportunity. Really appreciate it.
Great. Bye. And